Hey traders, Jason here from Levitt Brothers. So I'm going to do an update of my State of the Market series. I'm going to talk briefly about the indexes, show some mega cap stocks, see where they're sitting, go through some internal readings, and then a couple other random charts. Just want to talk through this stuff, try and get an idea of what's going on. Not that we want to make sense of it, but there seems to be some cross currents. Not everything is on the same page, so I kind of want to bring everything together and see exactly where we are. All right, let's get to it. All right, so first off, here is the S&P 500. From my vantage point, the index, the market is strong, it's healthy, it's trending up. I don't know how anybody can come to any other conclusion. It's a huge rally here above the 21-day. A brief dip last April, another huge rally above the 21. And then we got a little bit messy here. I consider this like a cup and handle pattern. There's your big cup, there's your handle. There's your neckline, then it breaks out. I'm going to delete those just to clean it up a little bit. There's your neck. So there's your cup and handle, breaks out. Now we have like a flag forming here. Here's support from the 21. Everything looks good. I know there's some bears out there. I know there's some perma bears out there. I know there's some people predicting pretty bad stuff. But as far as I see, like this is strong. This is trending up. I don't know how anyone could not be long here. Peter Lynch talks about how more money is lost anticipating a recession than in the recession itself, and this is what he means. He's like people are not necessarily short, but they're way underexposed, or they're not in the market at all, or they got the money sitting in 5% CDs. Meanwhile, the market is higher highs, higher lows, goes up, consolidates, goes up again. Everything looks good here from my vantage point. I don't know how you can have a bearish interpretation of this. Here's the NASDAQ. The move off the low over here, this is the carry trade low, this kind of sequence here is nearly as good as the S&P, but because this drop here was greater, we're further from the high, whereas the S&P is basically at its high and NASDAQ is not. But what I see here, I see a rally over here above the 21. I see a breakout here at 16,500. I see a test of that level there, and then I see a rally up, and we're basically unchanged going back 3 or 4 months. Kind of messy, high here, low here. We can't really draw really good trend lines in here. I get it, but bottom line is, we have a super strong rally and we have consolidation going for the last, 3, 4, 5 months. I can even draw a chart. I can even draw trend lines like this. And basically just say, whoops, didn't mean to erase that. I can draw it like this and say, hey, 95% of the data points are contained within that box. We have a rally up and then a sideways movement for several months. Other than the carry trade over here, all the data points fit in this box. So rally, consolidation, everything looks good here. Again, I don't see how anyone could be overly bearish. Maybe you could draw some trend lines like this and say, hey, we got a rising wedge within an uptrend, and this could resolve down. I guess it's possible, but I personally choose to view it as a consolidation within an uptrend. All right, let's get into some we're going to look at some individual stocks here just to give you an idea. Here's Apple. Okay, it's been sloppy. You can't always draw trend lines to contain all the data points. But bottom line is, for the most part, we have a huge rally over the summer and a consolidation. Most data points going back a couple months fit within here. So is it ready to break out and run? Not ready. Not yet. But it's not bad. It's just consolidating within an uptrend. And it's getting positioned to run. And if it runs, obviously the market is going to do incredibly well. Next up, here's Amazon. A little bit messier. If I ignore the carry trade low, I'd like to see that. I'd like to draw my trend lines approximately like that. So if I ignore this, which was just kind of news induced, it immediately recovered. I see a strong stock trending up. Now I see a multi-month consolidation pattern within and within a little bit of a falling pattern here. So this is not ready to break out here and run up yet, but that seems to be what's in the works. Google hard fall. This was a hard fall. It bounced and then it fell again. So it definitely was weaker than the other mega caps. But I see a little bit of a, we got a base here. Maybe this is, maybe this is a left shoulder head. Maybe if we get a little bit more consolidation here, it'll be positioned to break out here. It just got above the 50. Here's the 50. Okay, it's going to start flattening out here. Here's the 8 and the 21 are moving up. So if we get a consolidation pattern here for another week or two, it'll be nicely set up to break out here and and make a run up towards its high. Here's NVIDIA. It looks incredibly good. There was a breakout over here. That was the breakout late last year, early this year at 500. They did a split, as everyone knows. Rallied up, consolidate, and now it's been in consolidation mode for the last couple months, which people have a tendency to they zoom in so close and then they panic and they don't realize, hey, if I back up and look at the longer term chart, this is incredibly bullish. It has huge upside implications. Is it ready to go right now? I don't know. But when you look at, this was a multi-month consolidation pattern over here, then it broke out and doubled. This is a 3-month consolidation pattern, broke out, rallied huge. Now we have another multi-month consolidation pattern. If this thing breaks out, it's going to run up huge, and the entire market is going to run up huge because of how influential NVIDIA is, both in terms of like the percentage weighting it has with the S&P and the NASDAQ, and also just if their business is doing well, then other companies are going to move up in sympathy. Last one here. Here's Tesla. Here's the 5-year weekly Tesla chart. Stock hasn't done great. If I back the chart up even more, you'd see that it came from like way down there. So huge rally. Basically have 1, 2, 3, a 4-year consolidation pattern. Lower highs here. Not predicting anything here, but I'm saying we got like 2-year consolidation pattern, and there's certainly, and it's starting to tighten up. It's above some key moving averages over here. If it could settle in over here, I think it's positioned to attempt the breakout. And if that breaks out, we could have a monster move. This is like 260 right here. If this breaks out, goes up to the high 300s. That's a 50% move. That's huge. Okay, so the point of me showing these is that a lot of the mega caps are not necessarily set up right now, but they're like in the process of setting up some longer term consolidation patterns and getting ready. And if they run, they're going to run huge. Okay, if I go back to the S&P, the S&P is up here at 5750. If these mega caps break out and run, the S&P is going, I don't know, at least 6,500. It could go to 7,000 if these mega caps actually run, which is the point I want to make. Like they're not necessarily set up yet, but they're getting there. All right, let's go through some of these breadth readings a little bit quicker. SP 500 versus the NYSE 80 line. Obviously, just trending up higher highs, higher lows, above the 21-day moving average. Even during this big drop here, which was a lower low. This continued to print higher lows. Okay, so advancers have steadily beaten decliners for months. Okay, there's no way to spin this to be negative. Everything looks good here. In the very near term, this is the 5-day moving average of the NYSE 80 line. We're getting a divergence that's forming here. S&P moved up to a higher high over here, lower high over there. That's what partially induced last week's weakness, early weakness. Now the SP 500 is essentially flat now, going back about 2 weeks. Similar periods, same thing happened. We got higher highs here, lower highs here. S&P moved sideways for a couple weeks. Lower highs here, higher highs here. Again, S&P moved sideways for a couple weeks. So this could be enough. Okay, it doesn't have to fall any more than it already did, or this can continue to weaken. We don't know. We finished the week under zero. It can continue to weaken, and we can get a little bit more consolidation. But just pointing out, like overall, per this chart, everything looks good. The big picture looks good. Near term, negative divergence needs to be resolved. All right, here is SP 500 up top, Russell 3,000 stocks above their 20-day moving average. We have negative divergence forming. So it just tells you that, like, in the near term, we got, market was here, and like 80% of stocks were above their 20-day moving average. Then the market is, finished the week over here, which actually was an all-time high closing on the weekly basis, and you only have 55%. So we went from 80 to 55, even though the market continued to go up. Okay, it's definitely higher. Okay, so less stocks participated. Now, this happened over the summer, where we had relatively low prints, but this was also the time period that the mega caps just basically went vertical. So if the mega caps want to take off, then this indicator would just ignore it. Okay, but unless the mega caps take off, then we're going to get some weakness here until this negative divergence gets resolved. Here's the same thing with the 50. Okay, so I don't need to go through it. Same kind of divergence is forming. We need this to be negated in order for the market to be kind of let free. Weaker prints over here, but again, the mega caps did incredibly well, so we could ignore this. But if the mega caps don't just completely take over, then we can't ignore it. All right, here's the 1 month high low. Same negative divergence is forming. Okay, I don't need to make the same comment. Lots of negative comments, or not comments, lots of negative prints over here below zero during a time when the mega caps did really well. So that's our situation. Negative divergence. So we have a high print here and 1 month high low there. Now we have a higher print and we have a lower print here. So less stocks came along for the ride on this last little push higher. 3 month high low, same exact thing is happening. Higher highs, lower highs, divergence forming. And same thing on the 52-week high low. Market makes a 52-week high low. Number of individual stocks making a 52 high low declines. So non-confirmation there. A couple other charts here just to throw them in. I don't know exactly what the meaning is because they haven't always given a consistent message. This is the Fed lowered overnight rates by 50 basis points, and all that has happened is TNX has moved down, and which is causing the 10-year yield to move up. So that's that. It hasn't always, you have, this moved up and the market moved up, and then this moved down and the market moved up anyways. So I don't know if you can draw some sort of conclusion that the market's definitely going to move opposite or with this. It's just worth noting that with housing, everyone's expecting lower rates. The Fed, everyone thinks like the Fed is the one that tinkers with mortgage rates, and they don't. Like this chart TNX is closely linked to mortgage rates, but the overnight rate that the Fed tinkers with has nothing to do with mortgage rates. So people are sitting at home wondering, like, hey, the Fed lowered rates 50 basis points. Why did mortgage rates go up? Yeah, they have nothing to do with each other. Anyway, so this is just something we maybe keep an eye on. I don't know, because we've seen these moved together, these moved opposite. Generally speaking, I don't think the market is going to like it if this continues up. So something to keep an eye on. And last one is the dollar. The dollar had a huge week last week, bounced off long-term support at 100, moved up over 102. The market generally likes a weaker or flat dollar, so we'll see what happens here. It's just worth showing out, just bringing this to everyone's attention. So overall, the indexes are doing great. The mega caps are kind of they're in consolidation mode. They're kind of sort of setting up, and they're potentially like setting up for a huge move. If they have if they break out and run, then the S&P goes 6,500, 7,000. Like, we're going up a lot more in the very near term. Some divergences need to be worked out, okay, with the breadth readings. All right, so overall, I'm super bullish. I don't want to say super bullish. Overall, I'm very optimistic that prices are going to head up into the end of the year and into next year. Near term, some headwinds we got to deal with. And then I kind of, in the back of my mind, I'm wondering what's going to happen if the dollar rallies and TNX continues to rally. All right, we'll see you next time.